Markets Now is brought to you by Durastack Trait Technology, the latest innovation from Syngenta. Available for the 2027 season, Durastack technology features three powerful modes of action to outsmart, outmaneuver, and outmatch corn rootworms every move.
Welcome to Markets Now. I'm Michelle. Work with Shawn Hackett of Hackett Financial Advisors. We saw mixed closes in both corn and livestock futures trade on Friday. And Shawn, let's start off talking about soybeans. We're going to have a higher weekly close here, but we set back a little bit on Friday after the IEEPA tariff ruling. SCOTUS striking those tariffs down, and there's a little concern that maybe this will mean that China may not fulfill its soybean purchase commitments. Do we need to have that concern?
I think it's a legitimate concern. Anytime you're taking a levered position and you're taking it off the table, you worry that maybe the other side's going to back away from their commitments. I tend to feel that the truce that the Chinese and the United States have put together is longer lasting than that. But it's an appropriate worry, and we just need to see evidence over the next few weeks that everything is still good. This meeting is still going to happen, and we still expect a broadening of this China trade deal to include other ag markets. Until we see that, I think the market's going to be a little worried that maybe we've put too much premium into the soybean market with that unknown in the market now.
All right, so talk to me about what happens next week as we've digested the tariff news here. The market is seeing a pretty good retracement. Are we able to keep going?
Well, right now, if you look at the chart technically, the 3-year and 5-year moving average on the July contract is 1160 to 1180. I think the last rally late last year went into that same range. So we're in major chart resistance. I don't think we can get through that, Michelle, until we get hardcore evidence that not only is this meeting going to happen, but that we can expect bigger things. And we need to see that. Until we do, I think the soybean market could be in a corrective phase.
Well, China is on holiday, and obviously we aren't getting any sales commitments or flash sales, I should say, on the 8 million metric tons of additional business they said that they were going to buy. Do you think we'll see any of that before that April 2nd meeting as a goodwill gesture or not?
I absolutely believe they will do that. If we're going to go ahead with this and we're going to have this meeting and we're going to broaden this trade deal, I would have to believe that they're going to show some goodwill and purchases showing that they're moving the ball forward ahead of this meeting. So I would expect, as they come out of this New Year's holiday, Chinese holiday, to see them back in buying soybeans and supporting the idea that all is still well, despite the Supreme Court, voting against these reciprocal tariffs.
Gotcha. We've also put some premium into this soybean market and into the bean oil market because of some optimism about biofuels policy too, right?
Yeah, we've been struggling to get clarity on the renewable diesel, the biofuel here in the U.S., and it looks like we might finally get that clarity, and it might be actually on the better side of what expectations were, helping the domestic bean crush for sure. And at the same time, when you're looking overseas and you're looking at Iran and the tit for tat, shall we say, of threatening to go in and take action, the Strait of Hormuz possibly being restricted or shut down, Russia, Ukraine continuing to not get along. All these are really, really impactful to the wheat market, which has always been the most geopolitically sensitive market in grains. And I think that the premium that we're starting to see that we haven't seen in quite a while, is appropriate, and it may still have further to go before we fully price in the risks that may be ahead of us going into the spring.
Meanwhile, wheat has had a chart breakout. Is it all short covering, or is this risk premium that's being put into that market?
Well, it's a combination of short covering, and it's a combination of putting premium into the market. We have significant unrest in Iran. There's a worry about the Strait of Hormuz that could be closed or restricted. Not getting good signs from Russia, Ukraine, de-escalating. It looks like it's re-escalating. And we have these Palmer drought severity indices in the U.S. that keep getting redder and redder going as we get into the post-dormancy season, and the market's starting to worry that a dry spring here could really hurt yields and maybe provide a a weather spark that we haven't seen in the wheat market in quite some time. So I think it's appropriate, and the market doesn't yet appear to be done putting that premium on.
So despite the fact that we're putting risk premium in the wheat market, corn has been a reluctant follower of the wheat market. And is that just because we're getting into that time period where farmers are picking up those cash sales?
Absolutely. We're seeing aggressive cash selling right now on corn that's keeping the market depressed, keeping it from following wheat, keeping it from following soybeans higher. And in addition, the weather down in Brazil for the second crop corn, 75% of the production down there has been excellent. And it looks like it's going to continue to be excellent. So a lack of weather worry down in South America, along with active cash selling here domestically, is keeping that market underperforming. And that's probably going to continue at least into the first half of March.
Yeah, and even with almost 5 million less acres in the USDA ag outlook for them, it failed to excite the corn market. So do you think we just stay range bound for a while yet?
I think we stay range bound until farmers ease back their cash selling, and until we, can see whether or not this supposed expanded trade deal is going to include the corn market. That certainly would change the view of demand of the balance sheet, and then of course we got to get to the planning intentions report and the quarterly grain stocks report at the end of March to see if the USDA's uh, outlook is correct or not.
Do you think China will buy corn? I mean, they bought
I
45 cargoes of sorghum. They bought Australian wheat. Is there a problem there?
I believe they are going to buy corn. They've bought corn before from us, and I think they need to buy corn. My understanding of the weather that took place in the last growing cycle suggests that their crop is extremely low quality. It's just not up to the standards that they need and want, and I think they're going to have to fill in some of that lack of quality by buying higher quality U.S. corn. So I think not only is there a need for it, but I just think it makes sense on increasing the goodwill between the United States and China that they would expand in the corn market. And we certainly, have some corn to sell at a price that China would find it fairly attractive at this point.
What about cotton? Is that a possibility for China to start buying?
Absolutely. We know that they continue and have always been one of our largest, if not the largest buyers of U.S. cotton is the Chinese. If you looked at a chart, all of a sudden in the last week and a half, we've seen a significant rally off of almost a V bottom off the lows here. And it looks to me like the market might be sensing that we're going to be seeing some increased cotton purchases. Of all the markets that I think would be the most logical to see an expansion of the buying outside of soybeans, the cotton market, in my mind, has the highest probability of seeing some headline or seeing some agreement or someone mention that they're going to increase those purchases. Boy, would that go a long way in taking snug supplies and making potentially even more snug, given how low the planted acreage is expected to be in this upcoming season.
So you've kind of alluded to some of the short-term forecasts here for especially wheat country, but what about longer-term forecasts, especially as we get into the growing season? What are those looking like?
We are in a transition year from a weak La Nina to a weak to moderate El Nino. The IRI, which comes out with dynamic models and statistical models, came out yesterday with all the models and showed there's a 60% chance that we're going to see an El Nino develop by July. The last 3 months in a row, we've seen those numbers go up every single month from 40% to 50% to 60%, suggesting that we are likely to have an El Nino type of July, which usually means, Michelle, cooler weather with timely rains. The last time we went through this was 2023, and that's exactly the weather we had, and we wound up having a pretty decent crop. So I think we're looking at a pretty good crop year, especially for the core growing season when yield is most impactful to corn and soybeans.
So let's talk about the cattle market down on Friday, but we had a lot of things to be cautious about: lack of cash trade, maybe a plant strike, and then going into the cattle on feed report, right?
Yeah, those are all big factors that, hard to gauge direction without getting some handle on all those things. One thing that I do continue to seize. I continue to see the actual beef cutout price not follow along with the cash cattle price, meaning we're seeing a wide disparity that the beef price is not following along. That means demand is backing off. It hasn't impacted the cattle price. We've had a harsh winter in many places that's kept a bit in the market. But I think the longer you go with a high cash cattle price and a lower beef cutout price, something's going to have to give. And I think that giving is going to be a weaker cattle price when it's all said and done.
Okay. We've seen some volatility in the milk market. Longer term outlook, do we start to see some improvement? The back months are starting to show a little bit of premium.
Well, if you look at the class 4 market, which is your butter and your milk powder, we've gone from $1,400 hundredweight to $19 hundredweight in the last month on a combination of the government putting out a renewed food box program where they make purchases directly from farmers and hand it to U.S. citizens who can't feed themselves. And we've seen China be large buyers of the milk powder market in global GDT auctions. The last auction saw the largest auction price increase auction in history. So certainly the demand side of the equation from the government and from China is creating significant optimism that we might have seen the lows in the milk market and that we were looking for some better prices ahead. And certainly the Chinese have purchased dairy products before, and we would be looking and be mindful of whether or not there's expansion in April of dairy products. Another thing to keep an eye on, but so far it looks very good that we've seen the worst in dairy prices.
All right, thanks so much, Shawn Hackett with Hackett Financial Advisors and Markets Now.
With corn rootworm costing farmers up to $1 billion a year, you need the right strategy. Introducing Durastack Trait Technology, featuring 3 powerful modes of action to strike corn rootworm at full force, outsmart, outmaneuver, and outmatch their every move with the industry's first triple BT protein stack built for corn rootworm control. Take back your yield potential. Make your move at Durastack.com. Available for the 2027 season.